Hey everybody, come on in. I hope you guys are doing well. So good to see you today. I I'm excited. We are going to jump into our portfolio power play and talk about some investments and investment opportunities that I believe are going to serve you well over the next 3 to 5 years. And also, I will answer a million and one of your questions about markets, investing, what to expect from the economy, all that good stuff. Tuesdays are one of my favorite days to do this. I'm super excited to have this chance to talk to you because I believe that understanding economics and practicing your economics every day is really a great pathway to success. So come on in, get comfortable, everybody, and I'm going to figure out what's going on here with my computer. I'm hitting buttons and it's acting a little bit weird. So let me see here. Who's here? See, I'm looking. I see AC Salam and Aisha. Good to see you, Aisha, and Angela McKinney, Antalita, Anthony Williams, Atasha, Claudia, Clyde, D Celeste, Josephine, Jerry. Good to see everybody. James. All right. So yeah, first thing I'll mention is the All Black National Convention. We're almost done solidifying our deal with a hotel in Chicago. We decided as a team that we want the convention to be more intimate. We like the intimacy as it is, so we're not trying to grow the number of spots. We really kind of just want it to be like a family reunion sort of thing, and that's just good for my mental health. I'm not good with like I don't want some massive event that has like thousands of people because it's really hard to form meaningful connections and relationships. And also we want spaces where you can network and all that good stuff. So pretty soon within the next few days, I will announce to you guys when the All Black National Convention is the specific dates, and I know it will be in Chicago. Also, those of you that wanted to come to LA, we are going to do stock options in Los Angeles. That we moved that date back a little bit just to get our budget right. But we're looking at late March or early April, like sometime maybe early to mid-April. So if you'd like to join us in Los Angeles, just know I'll send you a notification, let you guys know when that's going to happen. If you haven't done this yet, text the word stock to 87948, 87948. And if you text stock to 87948, then I will send you notifications on when things happen. I've been giving out the wrong text number for a while. I was actually saying it wrong for a long time, and some of y'all corrected me today. So I want to say thank you for correcting me and fixing that. I can't believe I was screwing that up. All right, so one thing I wanted to talk about uh, to kind of start the day is the Black family. And, one of the things that I think gets missed, and I've casually mentioned this, but I was just thinking about this today when I was on the treadmill, is I don't think we really have really harnessed and fully understood the Black family as the multi-million dollar asset that it is, and really understood why there is such a vested interest in destroying our families, right? Keeping our families broken apart and chopped into little pieces. And I think it comes back to like an understanding of how economic systems work in a capitalist society. That capitalism is built off of exploitation. They really want to pimp you. That's their goal. And part of this process is to think, if you want to understand capitalism and the hardcore capitalists, you want to think like a pimp. This is why I don't want to be a capitalist. I'm not a capitalist. Because basically, so if you think about it like the way a pimp thinks, a pimp doesn't typically try to recruit people that have a solid foundation. They don't recruit people that have high self-esteem. They don't recruit people that have a strong family support. They don't recruit people that are doing well economically, right? And um, and so to some extent, if you look at America as the economic engine that it is, and as the capitalist society that it is, you got to really sort of think for a second about why America is so strong. And um, and so one of the things that I wanted to kind of express to you is I think that there's something about the destruction of the Black family that is deeply and sinisterly linked to America's economic strength and prosperity, right? Going all the way back to slavery. That's why we read Dr. Claude Anderson books every Wednesday night because it kind of gives you the origins of this. One of the great things that they've always sort of feared is black people coming together, right? They specifically had laws, 100, 200 years ago that said that if more than X number of black people get together in the same location, then they're all going to be arrested because we don't want you gathering as a collective. And so when you expand on that thinking, what you really got to think about is, think about things like labor unions. Why do you think when corporations, Tesla and others, when they hear, or Starbucks, when they hear about their employees coming together, they start doing what? What do? They start union busting. They start punishing union leaders and firing the troublemakers in the company. That's what Amazon did also, right? Does anybody remember that? Give me a yes or no if you remember when Amazon started to have people trying to unionize. What did they do? They went in there and they fired. I think there was a black man that was the head of a union in New York, and they got rid of him. And they were literally looking around to find anybody looking to bring employees together. And so when you think about why the black family is a powerful asset, and also why there was a deliberate effort to destroy the family, you got to think about it not so much in terms of family, but think of it as just another group. Anytime you have groups, you have power, right? Anytime you have organized collective effort, you have a source of power. So the capitalists, their power is pretty much in the capital base. Their group is pretty much money. They got a big pile of money that lets them sort of do what they want to do. Labor has power if it's together as a group, right? If you have a union, then the union can negotiate with the capitalists and demand higher pay for all the workers. Why? Well, because they're doing a collective bargaining agreement. When you bust up the union, you're taking away the power of the worker. This is why American workers' salaries have not gone up for a long time, because in the 1970s, 1980s, people on the right worked extremely hard to bust up unions and anything that was going to get in the way of them being able to make money. So, so in my view, the same reason they want to bust up unions is similar to why they would want to bust up families. Because if you think about this, right? So I want you to imagine a strong black family that, where everything is going the way it's supposed to go. So think about this family structure. Now, give me a guess if this is making sense to you. I hope you're following this logic here. And by the way, I'm actually going to talk a little bit about a stock that I like right now. And in fact, I'll just give you a precursor. It's actually Apple, and I'm going to explain why I like Apple right now. There's a couple of factors that play right now, and the market's struggling a little bit, so that's a great opportunity to go buy some good stuff. All right, um, so let's process this for a minute, right? So imagine a black family that is doing everything that black families do. So in my book, The 10 Commandments of Black Economic Power, you can get a copy at drboycebooks.com. I talk extensively about how the family is an entity that can pretty much accomplish almost everything you can get out of a regular out of society. Uh, in a properly functioning family, the parents and the family become the source of education, right? Or the dominant force when it comes to the education of the child, which shapes their value systems. And part of the value system is, that we're doing what's best for the family. Family first, family first, family first, family first. That's it, right? And then the other thing that happens is that the family can also be the source of the economic system. You got the family business. We as a family get together and we pour all of our labor. Every hour of labor that we put into working has economic value, right? So if I go to the corporation and I give an hour of labor, they're going to pay me $40 an hour for that labor because they're making $100 an hour. So every time I pour an hour of labor into the family business, it's like literally giving $100 to my family every hour that I work. Do you understand? Do you follow me, right? So effectively, you have this closed enclave where it's hard for an outside force to be able to make money off that, because they don't need your education system, they don't necessarily need your economic system, they don't need, maybe they don't even need your media or whatever, right? They don't need your consumer items. Maybe the family has figured out a way to produce the things that it needs, right? In an ideal scenario, if you have a big enough family, maybe you can even make your own clothes, grow your own food, all this other stuff, so you're not even going to the grocery store. You're not hiring outsiders because you got everything you need within the enclave of that big, powerful family. This is why a big, strong family is really an amazing asset, but you got to manage the asset just like you do with stocks, bonds, real estate. You got to manage that asset. And we don't manage the asset very well. We don't manage our families very well for some of us. So go to the other extreme. So let's look at a family that's broken and busted up, like just like you bust up a union. Well, when something's busted up, then it's divide and conquer. Everybody's scattered. Okay, so mama and daddy got together and they discovered this thing called sex, and they started doing it, and then this baby comes out, and the mother and the father, because they've never learned any form of group economics, they've never learned the importance of groups and family. They've never learned proper conflict resolution. They've never learned any sort of development or maintenance of structure. The mother and father split up. So the father's out in the streets. He's doing whatever. He's trying to pay his child support. He's struggling and he's working for the man. So all his labor that will be poured into the family is being poured into somebody else's business. So somebody's getting rich off the father, and then he's also taking that money and he's paying it, trying to pay it to the child support courts. So he's off balance. He's off balance because of divide and conquer. He can't. He's not a group anymore. He's an individual, right? And maybe he's got babies in different households, and y'all know this whole story. Y'all seen this, right? So then the mother is trying to raise the child and trying to be there for the child in every way that she can, because mothers have this thing in their brains called oxytocin, which genetically attaches the mother to the child. That's why when the baby comes out, the mother can't abandon the baby because she's feeling too connected to the baby. It's biological. It happens this way. And so she's sitting next to the child. She's doing her absolute best. To raise the child, teach the child, protect the child, all that. But she needs money to do that, right? And running a household is a two, three, four, 5 person job. It's not a 1 person job. So she's doing a 1 person or four, 2, 3 person job by herself. So she is working all day, 2, 3 jobs, and her kids. The whole time that she's away from her children's brains have been occupied by these external forces. They've been occupied by media. The kids are at school all day, so someone else is taking over their educational process. She's serving the corporate plantation. So every hour of labor that would be $100 an hour that she's pouring into her family is now $100 an hour being poured into somebody else's family. And then also, and then in addition to that, because she's struggling in the wealth game, she doesn't own the property that she lives in. She's renting that from the landlord. And then whatever extra money there is available, it's used for consumer items. So effectively, what's happened is that all these external entities, from the public school system to universities to corporations to media to the landlord, and I can keep going on, the government, etc. They're literally, they break it apart and they pick it apart like a piece of chicken. Like how you cut a chicken open and this is what I'm visualizing, and you're pulling the meat out of the chicken. That's what they do with the family. The family was a whole chicken, and they cook the chicken and slice the chicken open and say, let us get the meat, and everybody's eating. And then after everybody's eating off of you and eating off of your family, you're sitting there like the chicken that's looking after it's been cooked and scraped for every ounce of meat on the entire bone. So the black family ends up looking like the piece of chicken where it's pretty much just a dead piece of meat now. It's been fried up and picked apart, just like they did with Africa, over 100 years ago, where all the countries said, "Okay, I'm gonna get this part, you get that part, etc." Right? And this tends, and think about this: the way they were able to eat this chicken partly was they cut it open and they broke it into little pieces and stuff like that, right? So basically, what I want you to understand is I laid those two analogies out, and I hope I said it in a way that makes sense. Let me know if it makes sense. I did literally have never ever given a speech like this before. I've never. This is I don't even think of this as a speech. This is me talking to you. Like I never you'll never you can search the whole internet. You'll never find this conversation anywhere, because every single day I do financial reflections. Every day I'm reflecting on the problem. I'm obsessed with the wealth problem. And so every day I come to a new insight while I'm on the treadmill. And this is my insight that I actually came to today. And it helps me to understand, and I'm that much more vehement in encouraging you to not overlook the wealth that is naturally tied up in your families. It's right there. It's already in there. But the problem is that you're so accustomed to this society that will chop up that family so they can pick it apart. And so they're making money. Think about this. Look at how much money other people are making. Just let's look at the child. They're making money every day you send your child to that public school where they're not even educating the child, but they get paid per child. They have billion-dollar contracts for books and food and everything else so that they can feed your child where they're not being educated. The media obviously makes a ton of money off the kids, right? Getting you to watch Disney movies and stuff. Then you have the universities that extract trillions of dollars from the black community and put you so far in debt that you can never repay the debt. And then they pass you on, they use you up and pass the kid on to the corporation. And the corporation then gets to extract thousands of hours of labor from this person. So all this energy and all these resources that would normally be poured into the family are being poured into these other entities, right? And so they're extracting wealth from the mother too. It's like, no, we don't want you to be in a situation where you can depend on your husband and your family, and you're looking to your family for things you need. We want you to look to the government for things you need, right? So we want you to look to the corporation for things you need. So the corporation and the government and the educational system, to some extent, have been really promoted as replacements for the family. And the problem with that is that you know, these entities don't love you. They don't care anything about you. They don't care about your well-being, and it ends up being very harmful. Like you imagine a family that depends on the corporation and the government and all these other institutions to survive. It's a very vulnerable position to be in, right? That job disappears. You're starving. Or if you have a little boy that gets out of line, well, then the prison system's making money from him, but somebody's always making money from you. So it's very important to sort of say, okay, if someone's going to make money from me and my family, it should be us first. We should be the ones. And part of it comes down to thinking about those basic ideas. Like, if I have kids, how do I keep this family together? And I think that should be a skill. I think that should be something people learn. I think that I'm a big advocate for tools like therapy and training. I think you should train on how to run a family at the same level you would train on how to be an accountant. Like the same way you would spend, it's no big deal for me to tell you to go take 30 hours of classes for you to learn how to be an accountant or a dentist or an engineer or a nurse technician. But people think it's insane for me to say, well, why don't you spend the same amount of time so you can learn how to manage your relationship? So that when you bring a child in this world, the most valuable thing that you'll ever be associated with, there's no job you'll ever be associated with that's more valuable than your child. And let me know if you agree with this. Can we at least agree with this basic idea that your child is more valuable than any job or any profession you will ever have in your life? If we can agree with that, if we can start there, then we have a foundation for this conversation. So we all agree that that child is more important than any organization, corporation, any entity I'll ever be associated with. Then why would you put more time into learning how to serve the corporation than you spend learning how to serve the child and protect the family? That don't make no damn sense. That's backward logic. Your greatest investment, I think, should be in your family, because I'll tell you, a person who knows how to marry the right kind of person, who knows how to reproduce with the right kind of person, who knows how to raise their children in a healthy, intelligent way, that person has an easy time building wealth. It's not hard to build wealth in that situation. But if you are undisciplined, untrained, and just going and what people do. People go around, they just sleeping with whoever and just having fun and living their best life. Well, then you end up in the struggle. That's what they want, because capitalism can exploit the hell out of you if you're sitting in the struggle. Millions of people in America are living paycheck. And what does the struggle look like? It's paycheck to paycheck, renting from the landlord, spending money on useless consumer items, struggling all by yourself, can't afford to take care of the baby, can't afford to pay your child support, and everything's just kind of in shambles. No sort of hope on forming any sort of security for yourself or foundation for yourself or some sort of cushion for yourself. You don't have a cushion. Every day is a struggle, right? And I think that's what I think they really want that, because if you're desperate, then it's easy to make a desperate man come to work every day. It's easy to make a desperate woman do whatever you need her to do, right? So what I would say to you, and this is where the long-term plan comes into play. We literally call it our Black Wealth Master Plan. If you want to see the Black Wealth Master Plan, it's very easy. It takes like 5 minutes to understand what we're talking about here. It's simple stuff. It's just the implementation that's hard. Go to blackwealthmasterplan.com. It's free. It's take a look at that. That's where that $5 a day plan and all that stuff is. Because if you engage in Planned Parenthood, like I'm talking about real Planned Parenthood, not the other type. I'm talking about planning parenthood and planning family planning properly, then you're gonna, as part of that plan, start investing for that child before they're born. You're gonna invest in two areas. One, you're gonna invest in learning how to be a good parent and learning how to be a good spouse, right? Those are a couple of investments you're gonna make. The third is you're gonna invest financially to make sure that there's a financial base for that child to operate in. And so if you do that properly and you invest consistently, it's very, very easy, very straightforward, not complicated for your child to have $250,000 in resources by the time they're 20, 25 years old. At that point, game over. All the struggle and the racism and the pain and most of that's gone because they're not even going to have to get up and go to work for somebody else every day. All right. So this is my reflection for today. I hope that part of the conversation was helpful to you. Now, if you put your question in the Q&A section, I'll answer your question. Let me talk about Apple stock. Let's look at Apple right now. Let's see where Apple is, and I'm gonna share my screen. And we're gonna. I was thinking about Apple today because I was sort of listening to some analysis. Again, well, I do everything on the treadmill because I'm trying to avoid getting fat. And and so today I was learning a little bit about Apple stock, and I'm going to tell you why I think Apple is a stock worth looking at. All right, so here's the deal. All right, look at Apple now, and Apple has had its worst start of the year since 1982. That's a long time ago. That's 40 years ago, 42 years ago. Um, in fact, in 1982. I mean, Apple wasn't really even Apple, the Apple that we know now. I mean, so this could be an opportunity, right? So if you look at the last month, you see it's gone down by 4%, 4.7%. Last 6 months, it hasn't gone up much. And this is interesting in light of the fact that AI has kind of been the thing. We know Apple has mastered AI. What they haven't done is told everyone that they've mastered AI. It's very strange. If you look year to date, so far this year, it's down 1.6%. The last year, though, it's up by about 41%. So it got a little bit of that AI boost. If you go the last 5 years, it's very good. If you look at the max and you go all the way back, look here we are, 184. Let's look at where it was in 1982. I don't even know if it goes back that far. 1984, it was 12 cents a share. How funny is that? All right. So anyway, I like Apple because I feel that Apple is, while they're dealing with a lot of pressure right now. The Chinese manufacturing base isn't what it used to be with the geopolitical tension and all that stuff. And they're getting some competition from Huawei that they didn't expect. I think Apple has tricks up its sleeve. I think that Apple, it's funny, like for example, they noticed that the CEO, Tim Cook of Apple, he doesn't talk about artificial intelligence or AI. Every other CEO is like AI, AI, AI. They're always using the words AI to boost their stock price. Tim Cook, they use terms like machine learning. And they even have those VR the headsets that Apple makes. I think they call it a wearable computer because they won't call it like a VR headset, which is pretty much what it is. And it's funny because they sort of do this, I think. I call them the Jay-Z of tech companies because Jay-Z does weird stuff that other rappers don't do to kind of maintain his uniqueness. Like he doesn't have a Twitter account. He refuses to have a Twitter, even though he could have 20 million Twitter followers. He doesn't want to be on Twitter. And I guess that adds to the mystique. So Apple kind of does the same thing. So they won't use words like AI. They'll say machine learning. But Apple make no mistake about it. Apple has mastered AI at a level that matches Amazon, that matches Nvidia, that matches Microsoft, that matches Facebook, all these other companies. So I believe that as Apple is grappling with the push down of its stock price, and then they've also had some issues with some copyrights. I know something with their Apple Watch; they had to take them off the shelves and stuff like that. I think they're going to deal with some of these issues, and I wouldn't be surprised if this year Apple pulls something out of out of its sleeve that involves AI that becomes absolutely revolutionary. I don't know if it's going to be an Apple car. I don't know if it's going to be some sort of no new, you know, AI for their iPhones or whatever, or something that uses their ecosystem. Now they do have some issues with the antitrust suits. A lot of the companies are being sued for antitrust violations. I think Google is dealing with some antitrust issues now, and Amazon. I know Amazon is, and they're always under threat of an antitrust suit. What has happened though is nobody takes them seriously. They don't enforce it. They just talk a good game and they bring them in for congressional hearings and there's a big parade on TV and then it just goes away. So I don't put a lot of faith in these antitrust suits. That's my point. I kind of think they're corny and just not accomplishing much of anything. So I think Apple and Google, I think they take them seriously, but I think they take them seriously, but I don't think they take them seriously. If that makes any sense. Like I think they do what they got to do. They fill out all the paperwork and they go down to Congress and get yelled at for 2 hours and then they go back to business as usual for the most part. So yeah, so I like Apple as an addition to the portfolio long term, not as some stock that's going to make you rich overnight. It's not going to double in value, and it is still a little bit. Some you could make the argument that it's still a little bit overpriced, but I like Apple right now. And if you want to see stocks that I sent out to the students this week, just go to drboycestocks.com. That's drboycestocks.com, and there's a whole list. We do something called What Dr. Boyce is Buying. So if you want to see more, just go to drboycestocks.com. All right. So let's see here. Good morning, Dr. Boyce. I actually held on to CYTK, and in one day it was busting by 91%. Wow. I bought more stock, but I intended to buy 100 shares when it was $45. CYTK. Let me see. Yeah, I think we talked about that in class, right? Let me see here. And just remember, when I talk about stock recommendations, I'm talking about like 3 to 5 years. It's not investment advice, but I'm talking about 3 to 5 years. I'm not talking about stuff that should move overnight. Yeah, Cytokinetics. It's a biopharmaceutical company. Pharmaceutical companies are a wild ride, man. Ooh, look at that. It's gone up 200% in the past month. Did I recommend it before it went up 200%? I think I did. I don't remember exactly. We go through so many stocks. I can't remember when we recommended what. I know I own some of it because usually when I talk about a stock, I buy some. So that's good. It's nice to know we're making money. Okay, good stuff. Yeah, I recommend it. Oh, in 2022. What? Wow. How cool is that? Let me see. So let me pull the stock up on the screen. And I'm always happy to find out that I did something good for you. All right, so let's see, CYTK. All right, let me look and share my screen really quick. And y'all got to forgive me. I got to keep taking my glasses off because I broke my glasses and I have this other prescription. And what it does is I can see things far away, like I can drive, but I can't read for anything. So so forgive me for that. All right, so let me open this up really quick. All right. So Cytokinetics, let's see what it's done over the last year. It's gone up 145%. That's good. Last 5 years, 1,327%. Oh, nice. So let's say that we were talking about this stock. I don't know. Let's pick September 16th when it was at 53. Okay, so it's about doubled since then. That's good. That's good. The thing about picking stocks to invest in that you have to understand is that it's not an exact science. In fact, a lot of the research says that it's really hard to predict what a stock is going to do, especially short term. If it's one stock and you're predicting what it's going to do, say next week or next month, that's really hard to do. Where there is some predictability, though, is that there is some research to say that if the whole market just starts dropping and is due to some systematic factor, like a bad economy or the Fed's hiking interest rates or something, those are great times to buy stock because what it says is that in this controlled economy that we live in, we do not have a free economy. The Fed is constantly manipulating the economy. So in this controlled economy, it says that when the Fed stops hiking interest rates, well, then stocks are going to go up. And when they start to lower interest rates, they're going to go up further. And now the hard part, though, is that the market in general knows what you know, right? They call that the efficient markets hypothesis. Or market efficiency. So the fact that everybody knows that it's going to go up means that it doesn't go up when it actually happens. It goes up when people think it's going to happen. So for example, you guys know I'm a big fan of Bitcoin, right? I've told you all why, based on every market dynamic I've seen, I cannot find any reason not to believe that Bitcoin isn't going to be just a gangster good investment over the next 5 years. Um, Bitcoin is the big talk in Bitcoin is that there's going to be a Bitcoin ETF released soon, and that's going to draw a lot of institutional money. Okay, good for Bitcoin. Well, the thing is that the market's been talking about this for like a year. So if you look at Bitcoin over the last year, it's gone up 172%. The reason it's gone up is because people have been talking about the release of this Bitcoin or the approval of the first Bitcoin ETF. Now, I do believe that when the approval finally goes through, there will be there will be another boost. I think that the market's gonna, breathe a sigh of relief, and there'll be a little bit of a jump. But a lot of the increase in price that you would expect to see as a result of the release of a Bitcoin ETF has already occurred. You understand? So the market is what they call a forward-looking indicator. It anticipates what's going to happen. It doesn't wait until it happens. And when the news is released, that's what makes it move. So like information is the biggest mover of stock prices. So whenever there's something on the news or something's anticipated, the stock market reacts just like, oh, really? Okay, great. And it starts going up or down or whatever based on the news. All right. So anyway, let me look at the next question. Taquana says, when investing in stock options that you sell, not buy, to invest in other streams of income, which apps do we use? I tend to use Robinhood. And we're going to meet with the Prime class. We're going to meet soon. So if anybody wants to join us, just go to drboyceprime.com. That's drboyceprime.com. And also, if you text the word stock to 87948, see, I got the number right this time, 87948. It text stock to 87948, and I'll send you a training called How to Make Money Without Working. Also, other than Apple, what are some good stocks to invest in? Well, I don't have the list in front of me, Taquana, but there's a section called What Dr. Boyce is Buying. If you're in drboyceprime.com, you get free access to that. And there's a bunch of stuff in there. What I do is I'll research every week. I pull up about 5 different stocks that I like, and some of them I invest in. Some of it, sometimes I literally invest all my money. I invest until I don't have any more money left. So sometimes I'll say, "Gosh, I wish I could buy this stock too, but I can't." It's like, maybe it's like dating or something, and once you pick a girl you want to date, you can't go date 50 of them at one time. So what I do is I'll take that list and share that with you guys every week. So feel free to go to drboyceprime.com. That list is in there. So log in and you can take a look at what I put up there this week. Let's see here. My question is on CYTK is when should I buy 85 more shares because the stock doubled? How long should I hold the stock? Those are hard questions. Those are really hard questions because nobody can predict where the stock price is going to go. That's a really hard question. So there is no should there. It's really investing to some extent is almost like a religion in the sense that there are people. The reason that you have trade in the market is because everybody doesn't believe the same thing. If everybody believed the same thing, then there would be no trade because it's like, think about it, like selling a car. If the reason a car gets sold is because there's one person who wants to get rid of the car and another person who wants to keep the car. But if both people want to keep the car, then there can't be a sale, right? Because I would say, hey, I'd like to buy that car from you. And what are you going to say? You're going to say, no, it's not for sale. So no sale happens if you don't have two parties, at least two parties that have differing perspectives on this asset, right? So in the stock market, the bulls and the bears get together almost like boys and girls at a club, and the transaction is like making a baby. So you need a boy and you need a girl to make a baby. If you have a club full of boys, I'm sorry, it's okay to do that, but you're not going to make babies in that club, right? Or a club full of girls, you need boys and girls. So in a market where everybody's a bull, well, then there's not going to be any sale because people are going to want to buy, but nobody's going to be willing to sell. You have to have bulls and bears. You have to have people such that at that given price point, there are people in the market who believe the price is going to go down from there, and then people that believe the price is going to go up from there. And if you don't have that, what happens is that the market price moves to the point where it hits the margin again, right? So if everybody's a bull, let me explain. So let's say everybody wants to own the stock. Everybody believes it's a great stock. Everybody wants to buy. Well, what's going to happen if everybody's trying to buy something? Answer in the chat. What happens if everybody says, I want to buy it, I want to buy it, I want to buy it, I want to buy it? What's that going to do to the price? Is it going to go up or is it going to go down? Answer that for me. It's going to go up. Right. Okay. So what happens is the price goes up. And then what happens is eventually some of the bulls turn into bears. So some of the bulls say, ooh, I thought this was a great investment at 90, but I don't want to buy it at 102. So they become bears. And then you start to achieve what you call market equilibrium. You start to have the balance again between the bulls and the bears, and then you can actually have trades. Some of the bulls that own the stock, the stock goes to 102. They say, you know what? I wanted to own it at 95, but at 102, I want to sell it because I don't think it's going to go any higher from here. So the short answer to that related to CYTK is nobody knows. It really comes down to whether you decide you want to be a bull or you want to be a bear. And also the fact that you're so obsessed with that one stock leads me to say to you that I think you should probably make sure you diversify, because you should never be at a point, in my opinion, where one stock is going to make that big of a difference in your portfolio. You want to have your money spread out. That's really the most fundamental way to invest. Um, Let's see here. Okay, January 2022. Oh, so I sent it out in January. Wow, I didn't know that. That's crazy. That's awesome. I'm happy about that. What is the projection on the next 3 to 5 years, and when can I buy? Yeah, I don't have a projection for that stock for 3 to 5 years, but every asset that I pick, I'm thinking 3 to 5 years at least. Really, it's 5 to 10 years, but 3 to 5 is at a bare minimum. Khaleesi, if Robinhood gave me marginal investing, should I be using it for long-term investments or short-term? You can use it for either one. Investing on margin is good because it lets you control more stock. There's nothing wrong with debt and leverage, but you have to think about it like driving a sports car. It's nice to have a car that can go fast, but you got to drive carefully. So debt is a wonderful financial accelerator if you use it properly. Most billionaires have debt. Don't ever let anybody tell you that all debt is bad. Sometimes having no debt is terrible because you're missing out on great opportunities. Credit card debt, not so good. Debt for I don't know, if $500,000 in student loan debt, not so good. But 50,000 in student loan debt, so you can become a dentist, that's a good investment because you're going to go become a dentist and you're going to make 150,000 a year and you can pay off your student loans. But if you have $1 million in student loan debt to become a dentist, that's bad. So debt is not just a matter of the type of debt, it's the amount of the debt that can take it from being healthy to being toxic. So you want to make sure you have healthy debt if you have any debt at all. All right. A person that has no investment prospects should rarely take on a lot of debt. There's no reason to take on debt if you can't find a way to use that debt to make money. Debt is an asset. Debt is just like taking control of a house. If you have a house and you're paying taxes and a mortgage on the house, let's say, and you don't have any use for the house, then you're wasting your money. But let's say that you take on this house, which again is like the debt because it's an asset, and you can rent that house out and make $3,000 a month, and all your expenses are just 500. Well, then that's a good move for you. You understand? So debt is not bad, unless it is. Okay. All right. So let's see here. What is the second most liquid market in the world? That's a good question. I want to say it might be the footsie market. No, 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 no. I mean, if you talk about all markets, I think the most liquid market in the world is the Forex market. If you talk about the most liquid stock market in the world, then I'm gonna guess footsie in London, but maybe I'm wrong. Let me see here. Um, Most liquid. I'm literally gonna do a Google search of this. That's a good question, Daryl. Um, Most liquid markets in the world. Well, Forex is number one, of course. Um, mm, Let me see if I can find a list. Okay. Top 10. No, this is futures markets. Come on. Maybe I could say most liquid stock markets in the world. Let's try that. Let's see if we can find a list here. Okay. So I'm seeing it's not in any particular order, but some of the most liquid on this list are Hong Kong Stock Exchange, Shanghai, London Stock Exchange, the Toronto Stock Exchange, Shenzhen in China, Euronext, Bombay, India, of course, Frankfurt Stock Exchange, Japan Exchange Group. Um, the number one most liquid stock market in the world is the New York Stock Exchange. Number two is the Nasdaq, and that's and then Euronext is third, and then Shanghai is fourth, and then so here's the thing, right? I know that America and its capitalism can be damaging and harmful at times, but the reality is that you have a huge economic benefit by having such liquid markets available. The fact that you can make investments and then immediately sell the investment and get your money back in seconds is a very powerful thing because a lack of liquidity makes it really hard for you to transact in a certain way. When you have investments that you've made and you can't get money out when you need it, well, then that puts you in a really vulnerable spot in the event that something goes wrong and you need money to pay a bill or whatever. And so, effectively, the liquidity of American stock markets is one of the things that makes America economically powerful. I'm not going to say it makes America great because it's debatable whether or not we're a great country anymore or if we ever were. But the financial markets are pretty sophisticated and powerful. That's why in 9/11, that's why they bombed Wall Street because they said America only has power because of its economics. If you undermine America's economics, you undermine American power. And then also I think the BRICS countries, more countries have joined BRICS lately. BRICS stands for Brazil, Russia, India, China, and South Africa. And these are other countries that want to create alternative economic systems that go outside of the U.S. dollar. And so they're seeking to become a threat to U.S. economic dominance, which I think eventually is going to work because the United States tends to operate on an island a lot. We tend to unilaterally do things that the rest of the world is repulsed by. You'll see where they have a UN summit where they'll have some resolution on racism, that's bad to be racist, and the United States will be the only country that vetoes it. Or you see what's going on in the Middle East, and every other country is voting for a ceasefire, but the United States doesn't. So I think that we do a lot of things to create these enemies, and so I think eventually that's gonna cost us. All right, so moving on. Let's see. 100% of Robinhood analysts indicate hold SPLK. None of them say buy. What's the reasoning behind this? I don't know the specifics on that stock, Denise, but I would pay attention to what the analysts say for sure. And so hold pretty much means don't buy. It kind of means like if you have it, you hold on to it because things could change, but it doesn't mean you want to necessarily buy more and double down. BLDN is also, or sorry, ELDN is up. I bought 100 shares because it was so cheap. I bought my daughter's ELDN stock when the stock was $1.47. My daughter wants 500 shares. I looked at the projection and it's 1560. Yeah, but I would be careful about diversification. I wouldn't go put too much of your. I don't think you should have more than 5% of your investments in one company ever. So I'm gonna go ahead and say if you want my 2 cents, I wouldn't do that. I wouldn't keep on buying into the same stock over and over again. I would buy different stocks. Let's see. Samuel Lark says that's where Dave Ramsey and Robert Kiyosaki split financial ideas. And Dave thinks all debt is bad. Robert believes debt is good for rich people. Interesting you say that because Robert Kiyosaki is um, getting some controversy because I could have swore I heard on the podcast that this guy is $1.2 billion in debt, which is insane. Um, and um, and I think that he said something like, "Well, it doesn't matter because if I default, it's the bank's problem, not mine, because you could declare bankruptcy and all that." And this is leading some to kind of question some of what Kiyosaki's saying. I think you can look at it in different ways, right? He's probably using the debt as an asset. Literally, access to capital can be as valuable as actually getting money. Like, with reparations conversations coming up, I encourage you to consider adding access to capital to the conversation instead of making it all about, someone giving money. Just give access to healthy debt. That goes a long way. The truth is that if you gave me a choice, right now, if you said to me, okay, Boyce, you got two choices here. You can either have a check for $5 million or you can borrow Warren Buffett's money for a month. Which do you think I'd rather do? That's the choice, right? I can either get a check for 5 million, or I can borrow Warren Buffett's money for 1 month and do whatever I want with it. Just not he's not giving me nothing. I just get to control his his capital. Let's look up Warren Buffett net worth. Warren Buffett net worth. So Warren Buffett is worth $121.1 billion. Okay. So I'm going to give you the short answer. Many of you have probably guessed. I would rather actually borrow his money for a month than get a measly check for $5 million. Well, why is that? Well, I could take Warren Buffett's money and it's easy to grow. Like I know exactly where to put it, and to make a reasonable rate of return. Let's say 5% per year, right? So what's 5% of 121 billion dollars? Well, 10% is 12 billion. So 5% would be 6 billion. And then let's take that 6 billion and divide it by 12 over over a month, right? So 6 billion over 12, that's $500 million a month. So I could make $500 million, which is like, I don't know, maybe um half a Diddy's net worth, right? And by doing no work at all. This does not require any work. It just requires me to take his money and plant it somewhere so it can grow. And I can make that much money, you know, in a month, just by putting it in a low risk, risk-free asset, buying some treasury bills or something. So this is why access to capital can be more valuable than actually receiving income itself. So if we wanted to increase black wealth by $1 trillion right now, if banks made a pledge to collectively loan, let's say $100 billion to, because I think we're going to spend, I don't know how many tens of billions of dollars going to Ukraine and um, Israel. So if they were to loan the black community $100 billion, and then let's say we spent $1 billion on massive amounts of financial literacy education as a requirement to get access to any of this money, like this would be fun, right? This, if I could design a fun program, I would say, okay, give me $1 billion, and so we can expand the Black Business School and we'll educate, 20 million people on the basics of what to do with money if you get it, right? So that's the first step. And then the second step is once you graduate, everybody can go to a bank, and you can, if you want to buy a house, you can borrow $400,000 to buy a house. If you're starting a business, you can borrow $200,000 to start your business, or whatever. If you want to buy some stock, you can go borrow $250,000 to buy stock. That would increase black wealth by probably about $5 trillion in one generation. Just access to capital alone would make a massive difference. Because a lot of you, with basic financial training, would be able to take that and turn that into massive amounts of generational wealth that would last for the rest of your life. So yeah, so there we go. So access to capital is big. We don't talk about that enough. All right, so let's see here. Hey, Dr. Boyce, what's the best ETF to invest in? Says Greg Harris. Go to blackwealthmasterplan.com. We got some suggestions there with the $5, $10 a day investment plan. And it takes just 5 minutes to learn how to do it, but it will make a lifetime of difference for your kids and grandkids. PTLO is dragging down my portfolio. You talking about Portillo's? Yeah, I bought it at 2090. Okay, the analysts are bullish. Let's see here. Goodbye now. I did this the same with Amazon when I bought it 139, dropped to 103. I bought more shares. I can't participate in stock options with my current broker. What are your thoughts? Dollar cost averaging, not getting caught up in any one company. And remember, if you catch yourself talking too much about any one stock, that means you're not diversified enough. You should be diversified enough where you don't have more than 5% of your portfolio in any one company. So if that one company is off, so what? There's another one that's doing well, right? So don't ever let anybody get you excited about a stock like you're betting on a horse. That's not investing. That's called gambling, right? So if you want my thoughts on Portillo's and Amazon, I think those are solid companies, but then again, I'm biased. I like Portillo's food. When me and my wife see a Portillo's, we always eat there because it's the food is good. Amazon is a quality company. They're never going to stop making money. And so the reason you do things like dollar cost averaging is because if you believe in the business, if you like that business and you like that company, then you're consistently buying shares in that company. So when the price goes down, you're just buying more. And if the price goes up, you're buying a little bit less, but you're still buying. You're always just consistently buying. You're doing the same thing consistently, and that's how you build wealth. You don't really build wealth by trying to do what they call market timing. Market timing is when you're trying to pick the right stock at the right time. Let me tell you, that will drive you insane. That will make you crazy. It will cost you money. You won't be glad you did it, and you're gonna miss out on a lot of opportunities. You really will. If somebody simply like think about like crypto, if somebody just calmly invested $100 a week or a month or whatever in Bitcoin, going back to 2015 when you first started hearing about Bitcoin, you would have hundreds of thousands of dollars by now, like or at least tens of thousands, right? Probably more than 100,000 or more, right? Literally, if you just said, "Okay, I believe in this thing," right? This is how you do business, in my opinion. This is me being opinionated here. The way you do business is you don't overreact to short-term fluctuations. There are going to be fluctuations, You just say, this is the business I'm in. This is what I do. Sometimes it's good, sometimes it's not. But this is so if you say, I want to go into the business of being an owner of Portillo's, then maybe you set your app to buy a little bit of Portillo stock every month or whatever you can afford, $10 a month, $50 a month, whatever your number is, and you're just there. You're just there. You're a long-term holder. This is what a lot of wealthy folks do. They have these long-term relationships with these companies they own. You have investors out here that have owned stock in certain companies for more than one generation. You have Disney investors, you have billionaire Disney families that have owned shares in Disney since the 1930s or 1940s or whatever, since Walt Disney was a young guy, right? And they go to the shareholders meetings and they complain when Disney isn't doing the right thing because they're in business with Disney. Now, Disney's not typically the only company that they'd be in business with, though, right? But they've got a massive amount of wealth, a vast portfolio spread out across different companies, and that's just where they live. They're not jumping ship every week because the stock had a bad week or a bad month or a bad year. So I would just pick your strategy and kind of stay with it. That keeps you from kind of going nuts and keeps you from missing out on opportunities. All right, so let's see here. Good morning. Should my two sons open accounts with E-Trade to invest together? If not with, then if not when, yeah, I think they should have accounts, individual accounts, if they're old enough. If they're under 18, then they might have to might have to have a custodial account where you control the money. I think introducing kids to money, is as teenagers is a good thing. A lot of teenagers like money. They want money. They want to buy stuff. And so there's a lot of ways to teach money to kids, um, that's going to prepare them for financial success long term. In fact, actually, I have a training you can have for free called How to Turn Your Child into a Millionaire. And if you text the word youth, YOUTH, to 87948, text youth to 87948, and I'll send it to you immediately. So if somebody give me a yes to let me know that text number worked. I was given the wrong number before, so I was totally screwing it up earlier. So text the word youth to 87948, 87948. And let me know if it's working, and you'll get the training sent to you right away. All right, so let's see here. At what point would you sell your stock? I know you mentioned you sold your Disney stock. I will sell stock a lot of times if I lose faith in the company and the company's management, like I did with Disney. I used to think Disney was a great company with smart people. Thank you very much, Taquana. I appreciate that. I used to think Disney was a great company with smart people that were making good decisions, and they were for a while. The Marvel franchise was really strong. It seemed like they could make no mistakes. And then suddenly it's like around the time Bob Chapek took over, they just started losing their way a little bit. They started getting a little, weird and greedy, and they made just these decisions that didn't make any sense. And I just realized I didn't want to be an investor anymore. Disney has done a terrible job of protecting shareholder value the last 5 years. It's been absolutely just embarrassing for them. And I read a whole book called Disney Wars recently that explained how their board is just full of these entrenched people who don't challenge the CEO when necessary. So they're not doing their fiduciary duty, in my opinion, to maximize shareholder wealth. And so a couple other things with Disney that turned me off was one, they messed up the Marvel franchise by being too greedy. They started just spitting out, just literally puking out these stupid Marvel movies because they figured people couldn't get enough of it. And some of these movies were just bad, and they were flops, and then they hurt the franchise with that. And then that doesn't even count like little things like the Jonathan Majors problem that they have. They got rid of him, and now they got to replace him as their villain. But that franchise is on its way down. And then the other thing that they did was they totally screwed up the streaming opportunity. Streaming to me, I didn't understand why streaming wasn't a slam dunk for profitability. I felt like streaming was just going to be a major cash cow for Disney. And I'm sitting there thinking, if you got 100 million people that are giving you $10 a month, why can't you make that work? Why can't you take that $1 billion a month and make $500 million a month worth of content and keep everyone happy? Why do you have to go deeper in debt and be bleeding money? I just don't understand it. I don't. So the other thing that Disney is having a problem with is uh they're dealing with the contradiction of owning ESPN. They're promoting things like sports gambling, which is very anti-family, which is against the Disney brand. So I think Disney's just kind of a mess. So that's why I stopped investing in Disney. But generally speaking, when I sell a stock, there's a couple reasons why I sell. I sell because either A, I lost faith in the company like Disney, or B, liquidity reasons, right? Sometimes you just need cash. That's why you have assets so that you can go and get liquidity and get cash when something comes up. Maybe you have an emergency or you want to take a trip or whatever. Another reason I might sell an asset is for diversification reasons. I just realized, okay, you know what? I have too much money in the stock market. I need to get more real estate. So I end up selling some stock to go buy some property or whatever. That's a real story. That's what I did in 2021 when the market was really taking off. I said I don't want to have all my money in the stock market, so I'm gonna go buy a house or two. And then the other reason that you might sell is oh, because you have another investment that you think is just going to do better than the ones that you have. So that's another reason why you might sell stock. Okay, so let's see. I'm gonna answer one more question and then we'll bounce on out of here. What do I think about PTLR, Palantir? I don't have time. I haven't looked at the stock, so I can't really say right now. Um, but if you log in at the blackstockmarketprogram.com, there's a link where you can leave questions for me, and I'll go and I can look at your stocks for you that way. But I don't have the information in front of me. Okay, your sons are 21 and 24. Yeah, Angela, I think that's great. I think your son should also be encouraged to do business with each other and just explore the idea of working together as brothers. I have had a wonderful experience working with my brother. It was the multi-million-dollar investment that my family made in me, and they didn't even know they were making it. When my mother used to make me babysit my brother and change his diapers, I had no idea that my brother would one day, 20 something years later, become my number one business partner. And working with my brother has been rewarding, number one, because we got closer, we bonded, we got a chance to really, like think about it. If you're working, if I'm working over here and you're working over there and we're working for different companies, sometimes we might not talk to each other for a while because we're both off working for the man. But if we're working together with each other to help each other become the man, that's pretty cool. And then we're having business meetings on a regular basis. So that means you can have family gatherings and write it off on your taxes because it's a business meeting and it's fun. You're blending. You're not doing work-life balance. You're doing work-life blend. Work-life balance came into existence because they wanted you to spend more time with your boss than you did with your own kids. And so they said, oh, well, we'll give you work-life balance. We'll give you a little time with your kids, but you're going to spend most of your time with us. No, it shouldn't be work-life balance. It should be work-life blend that you're making money with the people that you love. That's so much fun. And so working with my brother has been awesome. It's been profitable. It's been a blast. We talk regularly. We're able to share life together in a way that I know we couldn't have if we were both off working on the corporate plantation. And all it requires is like a little bit of skill. All it requires is, for you to be willing to take a couple of chances, So you got that 24 and 21-year-old siblings that love each other. Let me tell you this too, another thing. Working with my brother was awesome because we will never abandon each other. When I didn't have money to pay anybody and everybody else quit because I didn't have any money to pay them, guess who never quit? Guess who stayed right there? That means a lot when you're starting a business because it's hard. It's tough. You fail and things go bad and most of my friends, I'm gonna tell you, I got so many people in my life that only want to hang out with me because I can pay them. If I stop paying these people, they'll all a bunch of them will just fall off and I'll never hear from them again. And it's okay. You just accept that. But so that makes me value people that much more who are gonna be here no matter what. When the money's dry or the money's strong, they're going to be there because they truly care about you and they love you. In fact, that was why I picked my wife. It was very easy to attract women when you have money. I mean, I'm known for understanding money, so people figured I had a little bit of it. And my wife knew me long before I had any money, and she had her own money. She didn't care about that, so that means a lot. I'm telling you, it affects you. It makes you a little bit jaded sometimes. And not to say I'm negative about it. It's life, but literally when you just see how the world changes, like the people see you differently when they can get something from you. And I think it comes also from scarcity, right? I think that because opportunities are scarce and money is scarce, when you are a person that has things that other people want, you just have to be a little more careful and protective sometimes, right? So working with my brother has been awesome because that's been the guy that's really stood by me the whole time. And I would encourage anybody, if you really want to enjoy your life, get together with the relatives that you love and just say, we're going to figure this out. We're going to come up with a business. We're going to do something together. We're going to succeed together. We're going to help each other. And I'm going to tell you this too. If I was young, if I was 22 all over again, you know what I would do? I would I would probably I would try to go like get with, marry my wife. I met my wife when I was 22. So that's probably what I would do. And instead of marrying her later, I would have married her in my 20s and I would have had like about 7 kids, 6 or 7 kids. And I would have done everything I could to homeschool the kids and train them on the value of the family. In our household, the most important thing in our world would be family, 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 and and I would train them on entrepreneurship. I would educate. I would be the first voice in their mind when it comes to their value system. And we would then go into business together when they were like maybe 12 or 13 years old, and we would go make millions of dollars together as a family, and we would love each other as a family, and we built this amazing family empire that would last a long time. When I studied the Rothschild family. Y'all know about the Rothschilds, right? Everyone has all these conspiracy theories about the Rothschilds, some of which might be true. And do you know that the first Rothschild in the 16 or 1700s, the one that was broke, that built the foundation of the family empire, you know what he did? He had 5 sons, and with each of these 5 sons, he trained his 5 sons to be very loyal to the family. And he told his 5 sons that nothing is more valuable, nothing is more important in your life than the Rothschild name. And he sent his 5 sons all throughout Europe to set up Rothschild franchises in different countries. And that's how the Rothschilds came to power. Now, if you want to talk about like a gangster move, something that's inspirational, something that this guy did, where he's just a regular guy, he was a regular merchant. A lot of us can do this, right? But you have to, in order for you to extract the wealth and value out of something, you've got to see the value. And I think a lot of us never learn to see the value in family. And if I'd known then what I know now, I would have invested most of my energy into family. I can't do that as much as I could when I was younger because I'm 52 now. I don't want to go and have a whole bunch of kids. But in a way, when I talk to you, I talk to you in a certain way because I see you as family. Like when we do the convention, that's family, right? I see this enclave of intelligent Black people as family. Like, okay, we're building this amazing thing. And I think people are going to talk about us for 300 years. I really believe this. I know this. I know this because I understand finance at a very, very deep level. And I believe that what we're doing is impactful and cutting edge. It's creative, innovative, and insightful, not just because of me, but because all of us are coming together with these ideas. And I think if we're able to even implement on a 5% level, like just 5% of what we're talking about, and really do it well and impose that to the children, it's going to be explosive, absolutely explosive. I think we're in the beginnings. This is the infancy. This is, you ain't seen nothing yet. And even, but I can also say that in the last 10 years, though, we really have changed the culture. When I did the stuff on the Breakfast Club and all that a few years ago, I started seeing more and more things change. I started seeing rappers talk differently about economics and wealth. So we're already getting things done, but but I think this is the beginning because once we have access to capital, where these ideas can be really expanded on a high level, you're going to see things really transition in a really powerful way. So anyway, that's enough of my rambling on. I'm just super excited about it, and I'm excited about you. And God bless you. And it's great talking to you. And I'm gonna go and hang out with my wife for a little bit. So have a good day, everybody, and happy investing. And again, if you want to get that training, it's free on how to turn your child into a millionaire. Just text the word youth to 87948. Text youth to 87948. Now go invest in your children, invest in your family.